What's up, everybody? Man, I already got a lot of people hanging in here. Stan Haley, just saw this comment pop in. Now, Dave Portnoy now getting that DraftKings back. I want to talk about that in just a second because it is pretty incredible. If you guys don't know the story about what's been happening over there at Barstool Sports, it's been absolutely insane. So, that being said, welcome everybody. Welcome to the Power Zone. My name is Brad. You guys see Don, my partner in crime, over there in the chat as well. He goes live Sunday, Tuesday, Thursday, so he'll be live this evening, 7 p.m. Eastern time. If you're not Don, sorry about that. I just called you out. Hope you're still on for tonight. I didn't really confirm with you on that one, but nevertheless, listen, we got a huge docket here this afternoon on earnings reactions. There's DraftKings, DoorDash, Roku, Coinbase, Trade Desk, Applied Materials, Toast, so many other ones that we're going to be reacting to today. And it's just been, one of those monster weeks for earnings. Obviously, everybody kind of thinks of the week of Apple, Amazon, Microsoft as a monster week for earnings, but I'm telling you, like, I've been covering so many of them this week. We're going to continue that into next week. So if you're visiting for the first time, make sure you hit that subscribe button, hit that notification bell as I go live at 3:45 p.m. Eastern time, Monday through Thursday, to cover these earnings. And man, it's just been pretty wild, pretty crazy. And yeah, so I'm super pumped. Let's take a look real quick at the S&P 500 because quite the recovery, and I'm actually a little bit surprised. I thought that maybe we'd see continued selling after that CPI report came out, and it's just the opposite. Over the last 2 days, we've seen a decent recovery, and the S&P 500 is threatening to go back to new highs. We're back over 5,000. It's up another 0.5% today. I stand by my thoughts on a potential correction this first half of the year. I think that, there's just a lot here that's just kind of getting ahead of itself. I would be surprised if this just continues to go. But as you can see, this is that nice little trend line that Don had drawn here on our charts, and with zones drawn out as well. I'm a little bit beside myself on the demand here to the upside. So I don't know what the rest of investors are seeing. Obviously, we saw that CPI print that was pretty high. I'm not saying that that CPI print is going to continue or that inflation is going to continue to go up, but we've talked about this as far as interest rates are concerned. People still, I guess, are convinced that interest rate cuts are going to be happening soon. I don't think that's going to be the case at all. Maybe by the end of the year, but we heard from the Fed, they're not hinting around that they'll be doing any cuts at all anytime soon. So that's just kind of a bit of a surprise to me. Maybe it's the AI craze. And speaking of which, if you guys haven't seen this, the OpenAI just shared this, and this is a little bit off topic, but this was crazy. This entire video was created by ChatGPT or OpenAI. They're calling this platform, what is it called now? It was called Sora. So this is a prompt that they just entered into Sora. Beautiful snowy Tokyo city is bustling. The camera moves through the bustling city street, following several people enjoying the beautiful snowy weather and shopping at nearby stalls. Gorgeous sakura petals are flying through the wind along with snowflakes. And damned if it didn't do it. So this Sora software is, or AI, is just basically taking this prompt and creating a 60-second or less video of whatever you prompt it to do. This is pretty wild stuff. They showed other examples here. And they also said, disclosure, this isn't actually live yet, but it will be. Said they're working with red teamers, domain experts in areas like misinformation, hateful content, and bias who are adversarially testing the model. Here's another one, another prompt, another AI created video. Absolutely wild. And here's another one. I mean, you can kind of sort of tell that person isn't real, but this one, yeah, that guy right there, he looks real shit. You probably wouldn't have been able to tell just by glancing at this guy that he is created by artificial intelligence. This is getting into pretty scary territory. Here's another one. Where's this at? Looks like somewhere. Yeah, another Tokyo video. This is a minute long, just like some B-roll. Unbelievable. So, anyways, I thought that was pretty crazy. Just wanted to share that because I thought it was cool. Not really for anything else, but we can continue that AI conversation, of course. Don says AI is only getting better every hour. Yeah, Don, I thought that we would see video like that maybe within the next, I don't know, 5 years, but the quality of that video was insane. All you got to do is prompt a video. I mean, being able to collect B-roll now should be amazing. It's been, and collecting B-roll right now is not all that hard, especially if you have a platform such as Canva or Adobe or what have you. But those are all, stored, and everybody has access to those essentially. This is creating B-roll or a video from scratch. It's yours. You get it. You don't have to worry about rights being claimed on it or anything. I mean, wait till like background music and stuff like that, because like that's always been a struggle, especially with us YouTube creators. Like whenever we want to use background music, we always worry about getting dinged on copyrights and that sort of thing. Puts all that away. Yeah, Don says puts on Hollywood for sure, man. I mean, it's pretty wild. I was blown away by that. Nevertheless, let's go ahead and get into some earnings, and see what's going on there. So DraftKings, I saw Shane Haley talking about Dave Portnoy. So DraftKings signed a 8-figure deal with Dave Portnoy and Barstool Sports. Barstool Sports was in bed with DraftKings back in the mid 2010s, and now they're back. And it's incredible. Dave Portnoy sells half of Barstool Sports to Penn National, then buys it back from Penn National so that Penn National can go pursue their relationship with ESPN Bets. Not sure how that's going to work out for them. It'll probably be fine. But then he buys it back from Penn National for basically $1 or basically nothing. Penn was just like, we just want out of this. Here, have it back. So makes $500 million on that sale. Buys it back for $1. And now signs another 8-figure deal with DraftKings. I mean, that's just unbelievable. Craziness, right? But DraftKings is one that's certainly going to be fun to watch. 18 cents per share, $1.24 billion in revenue. Not a lot of bullish ratings on this. So I'm not sure how this is going to play out, but I actually think I'm going to take the other side. I think that there is some reason to be bullish on this. We'll hear what they have to say. One of the big things that we're going to hear from DraftKings is that Super Bowl update. I think there's a lot of folks that are a bit hesitant on DraftKings because the house didn't really win, and not just from DraftKings, but sports betting as a whole. A lot of people made a lot of money over Super Bowl, but I think the one thing that many investors are failing to realize is that because sports bettors won a lot of money over the Super Bowl, that makes them want to come back, right? So it's not just DraftKings that benefits from this, but all of sports betting, I think, benefits from this. And so I think that while, yes, the Super Bowl numbers may be not great, but the growth with DraftKings and really sports betting in general is absolutely insane. DraftKings is on a trajectory, though, of like growing at all costs, which is kind of like where I'm coming from as far as the Super Bowl numbers are concerned. If you have Super Bowl numbers that, where basically bettors won a bunch of money and now you lost a bunch of money as a sports book, on the surface, it doesn't seem like it's a great business model, right? But if you look at it and you have more people coming back to use your platform to bet on other sports, it's almost like I said, that grow at all cost mentality. Will it work out for a company like DraftKings? Maybe, but they are growing at 77 times they're growing at 77% year over year on revenue, which is absolutely insane. Forward growth is expected to be around 53%, which is also pretty great. The big issue here is going to be profitability. As we all know, it still isn't great with a company like DraftKings. Gross profit margins are at 37.5%, and they are operating at a loss pretty much everywhere else. So while their earnings, yes, are at 18 cents per share. Just be careful with this one. I think the initial reaction on earnings may not be positive, but I think the long run should be good. Just kind of depends on how long you want to hold on to something like DraftKings after it's already kind of gone up a ton, right? I mean, over the last 52 weeks, we'll be looking at 52 weeks, 150% the stock has moved up, and really since the beginning of the year, also up another 27. So it's gotten pretty far ahead of itself. As I'd mentioned, $1.24 billion in revenue and a market cap of $20.5 billion. So I don't think it's crazy expensive, but it ain't cheap. Let's put it that way. Don said dealers always give the first shot of heroin for free. Exactly. Exactly. So, all right. Next up is DoorDash. If I can get this pulled up here. Here we go. DoorDash also, well, that's up a ton. It's up 5 1/3 today so far. We got about 3 minutes into the close. Let's go ahead and get to the 5-minute chart. We can just actually no. As I'm reviewing these, let's just keep it on the daily. Here's your daily chart on a DoorDash, and hell of a day today for this one. DoorDash is expected to come in. This might be setting some up for not good, not great move, I should say. This is trading at 67, almost 68 times next year's earnings. Stupid expensive, 47, almost $48 billion market cap on a stock that is bringing in what, $8 billion a year. That seems a bit excessive. Seems a bit, and so estimated earnings per share is 55 cents, $2.25 billion in revenue. Lots of upward revisions on this one, though. Growth is certainly there at 35% year on year. Forward growth is expected to be around 27. Profitability wise is also okay at 47% gross profit margin. So we'll keep an eye on this one. As far as reaction to earnings here, I'm a bit hesitant to be like, oh yeah, go crazy on this one just because of the valuation. It is so expensive. I'm not quite sure the growth is there to justify nearly 70 times next year's earnings. So next up, we'll have Roku, and those are the big three that I'll cover before market close, because I get into covering anything else, and then I'm just going to lose track because my head's going to be spinning once market closes here. But here's Roku. Obviously, been a struggle. Kathy Wood special. Earnings are expected to come in at a loss of 58 cents, $967.11 million in revenue. We take a look at valuation here, and it is at $13 billion. It's still expensive, very expensive, in my opinion. But they're not even growing as fast as they should. 7% year on year. I'm not crazy about Roku right now. Now, I know that Netflix and Disney, a lot of the other subscriber-based streaming platforms have done well on their earnings, so maybe that bodes well for Roku, but I'm not convinced of that yet. So they're going to have to prove it to me. Not saying that Roku is a bad stock to own. I just don't know if I want it right now based off of how it's been performing. Yeah, Don says Roku's innovative AF. Karem says DoorDash 160 tomorrow. Huge beat incoming. All right. We'll see. Yeah, Coinbase will also be reacting to. We're going to be reacting to everything, guys. So just be patient with me. I know as more people roll in here, they're going to be like, why haven't you covered this stock? But that's because they all come out at the same time. So, and I'm one dude. So just be patient with me. I'm going to try to cover as many as I can. We're going to split the screen up here and get to our 5-minute chart so we can see these real-time reactions. Here is, whoops. How did I just do that? Here we go. I have a touchscreen, and usually I can't do that when I'm using the touchscreen. Anyways, here's Roku's movement now that we are officially into the close. Let's go ahead and pull up DraftKings next, and then get to the 5-minute chart there. Here we go. 5-minute on both of these, and Roku is tanking already. Coming down to the top of that zone. Just barely came down to that 86 at 63 is the top of that zone on Roku. Looks like those numbers might be out. Let's take a look. See what we got. Okay. Roku came in net revenue $984.4 million. That is a beat on revenue. Let's see what they got on earnings per share. Obviously, guidance is also going to be a thing, as it always is. Come on. Give me the rest of the numbers here. They're slowly trickling in here, guys. So they beat on revenue. That's the only number I'm seeing right now. Stock is getting crushed. Now down 17%, blasted right through that zone, trying to hold up above this zone. DraftKings looks like it's starting to move up a little bit. Roku bouncing right off the top of that zone. Came down to 78 and is bouncing off of that zone there. Let's see here. It's still getting killed. Where are the numbers? I'm like trying to reach out to every resource I have to see where they are. And I don't have anything yet on these numbers, but the reaction certainly is there. All right. So hell of a bounce off the top of that zone at 78, though. Now down was down around 17%, now up around 12. DraftKings is up around 1%. Doesn't look like there's too much movement there just yet. All right, I'm going to come back to Roku. Let's go ahead and check out some other ones that are probably moving here. Coinbase starting to move here a little bit as well, sitting in the middle of this zone. What's that giant zone? 158 to 169. Okay. Let's see what I got on Coinbase here. Bear with me. Bear with me. Just some, I think, after hours movement on here. DraftKings looks like it might be moving based on some numbers. Let's go ahead and take a look at that. Nothing there either. What is happening? What happened to Roku? Roku is not doing so hot. Let's go back and take a look at this. Just continues to get beat down through these zones here. Down another 16.5%, or it's down 16.5%, not another 16.5%, but it continues to just sell off here. Okay, here we go. They came in and beat earnings, a loss of 55 cents versus a loss of 65. Revenue came in at 984 versus 960, so beat on revenue and earnings per share. Guidance here for Q1, the current quarter that we're in, 850 million versus 842 million. So a beat on that as well. Gross profit 370, adjusted EBITDA break even. Why are people selling this off? So adjusted EBITDA for fiscal year 2024 is positive. What's in this report that's got this selling off so much? Feel free to put it in the chat, guys, but I'm like not seeing any reason why this should be down this much. Kind of doesn't make any sense based off of those earnings, unless there's something that I'm not seeing, right? We'll come back to that, but Roku actually beat earnings and beat on guidance too. Usually guidance is what's going to kill a stock like this, but the guidance came in above expectations. Not quite sure why that makes any sense off of those readings. Very interesting. We'll return to that one. Let's go ahead and take a look at some other ones that have earnings today as well. DraftKings, you guys can see on the right side of my screen. Don't see any numbers on those just yet. Let's take a look. We also have Trade Desk that is reporting earnings today as well. Let's go ahead and take a look at Trade Desk. Oh my God. That's up 22%. Holy shit balls. Let's see here. Earnings came in $606 million in revenue, 19 cents per share. If you guys didn't know what those earnings numbers were supposed to be or the expectation, let's see. Let me just confirm this. $582.23 million in revenue was the expectation. They came in at 606. So big beat on that. Net income grew to 97 million in Q4, highlighting Trade Desk's profitability and effective cost management. They missed on earnings, it looks like. Oh, they also announced a $700 million buyback. That's big because this is already kind of like a low structured stock anyway. So they came in, we'll call it in line on earnings per share. Revenue came in at 606 million versus a 581 that was expected. The big news here, it looks like so far, just from what I can tell, is a $700 million buyback, and his stock is up around 19%. My goodness. Checking back in on Coinbase, and that stock is tanking right now. Coinbase, you can see the chart right there on the left, on the right side of your screen. Blasting right through that zone. Breaking right down here. 147 looks like it could be next here for Coinbase. Interesting for Coinbase because Bitcoin's been doing well, as you know, for the last several months. Bitcoin's been doing well. And, we saw some pretty decent numbers from Robinhood, surprisingly. So you would have thought that Coinbase could have done well too. Coinbase's expectations on earnings was 20 cents, $818 million in revenue, tons of upward revisions on that one. It came in, let me just double check. I always like to double check here. Earnings per share of $1.04. Revenue came in at $954 million, beating expectations of $818. That's also great. Net income $273 million, also great. I'm not seeing what the big deal is, why it's dumping off. Some really confusing moves here. Roku came in, smashed earnings, did really well, came in with great guidance, stock sells off. Can't make sense of it. Coinbase is bouncing back. It's now flat. Roku still getting hammered. Now it's bounced right off the bottom of that zone at 76.10. Trying to make a comeback here. God damn. What a move on that. Okay, let's check out DoorDash. Looks like those numbers might be in too. Let's see here. See what we got. Looks like it's been kind of moving all over the place. They came in at a loss of 39 cents. Is that right? That can't be right. Bear with me, folks. They came in with revenue 2.3 billion. So they beat on revenue. Q4 orders 574 million versus a 561 that was expected. That's also a beat. Earnings per share, yeah, it looks like I'm reading that right. A loss of 39 cents over the 18-cent estimate. Wow. Okay. DoorDash right now is down around 4%. I mean, I wasn't high on DoorDash going into these earnings, as I'd mentioned to you guys, so not surprising to see this down, but kind of an odd missed. It's got to be like tax related or something. Let's go ahead and take a look at some of the other ones. Toast is also reporting earnings today. That stock is up another 17%. This has been like a low key. I've been a low key fan of Toast. Not a lot of people cover this one. I don't really cover it as much as I should, but I've always been a fan of Toast. It's obviously not had a great year, but they're still growing like crazy. Right now, the stock is up 16%. Estimated earnings per share were a loss of 1 cent. $1 billion, 1.02 was the estimate there for revenue. And Toast came in. Looks like they improved their losses. It looks like layoffs. They announced some sort of layoff. Yeah, 550 workers. Is that right? No, that's not right. Let me take that back. Redacted. So they came in revenue at 1.04 billion, so they beat the 1.02 estimate. Adjusted EBITDA 29 million versus a 14.8. That's huge. That is huge. They're going to buy back $250 million of stock as well. It's the afternoon for buybacks. Trade Desk announced a $700 million buyback, and that stock is up 20%. Toast announced a $250 million buyback. That stock is up now 12.5, now 13%. So pretty nice move from both of those. Applied Materials also had earnings today. That stock is up 9.25%. My goodness, what an insane afternoon. Applied Materials. Let's see what we got. Earnings per share, $2.13 versus the $1.91 estimate. Revenue came in 6.71 billion versus the 6.48. Goddamn. Huge move there. So smashed earnings expectations for the quarter that they're reporting on. Guidance, $1.79 to $2.15 versus $1.79 that was expected. So really nice beat on that. Revenue is expected to come in at $6.5 billion versus the 6.3 that was expected. So a $200 million beat on guidance as well. Stock is doing pretty good here for Applied Materials, is up 9.25%. Pretty amazing stuff there from Applied Materials. Let's check back in with DraftKings. Stock hasn't moved much here. Are those earnings out yet? Let's see. Don't see any earnings numbers just yet on that. So it's probably a good reason why it hasn't been moving. Let's check in with some of you guys so far. Karem says the 2020 stock market is back. Sure feels like it. Sure feels like it. A lot of buybacks lately. Yeah, I mean, today for sure. Hamza is real big on DraftKings. What time will they release? I would imagine any time now is when that's going to happen for DraftKings. But if you guys are just tuning in, we've covered a bunch of them. And so obviously DraftKings we're waiting on. Roku, though, came in and beat earnings. They beat on earnings, they beat on revenue. Still trying to figure out why this is selling off so much. They beat guidance too. Guidance numbers are great. Well, they were great based off of what was expected. So they came in loss of 55 cents. The estimate was around 57. $984 million in sales versus 966 that was expected. Q1 a total net revenue of 850 versus 833 that was expected. You would think that stock would go up, yet it's down like 18%. And I'm still scratching my head over this. I got no idea, guys, why this is selling off so much. There's got to be something I'm missing. Active accounts were 80 million, a net increase of 10 million from 2022. Maybe that's what it is. I wonder what the active accounts was expected to be. I haven't seen that yet. Streaming hours were 106 billion, up 18.6 billion hours year over year. Average revenue per user, ARPU, was $39.92, trailing 12-month basis. That's down 4% year over year. That could also be it. But for a reaction like this, it doesn't make a whole lot of sense. There might be some upside opportunity here for Roku. Z-Writer says that means it's a buy. Yeah. Coinbase. Let's go ahead and check back in with Coinbase. That stock turned right around. It's now up 8.7%. Don said to compare them with Apple right now. Yeah, Apple's climbing here. Kind of interesting. But yeah, Coinbase like blasted right through the zone and then came right back through it to the upside. It's up to $180, 185. Sorry. Let me rephrase. 178.01 where that's trading at right now. Coinbase came in $1.04. They beat by $1.03. Revenue of 953 million. They beat by 134 million, almost 135. They expect Q1 subscription and services revenue to be within a range of 410 to 480. I believe that is also a beat. They anticipate transaction expenses will be in the mid-teens as a percentage of net revenue. Expect technology and development and general administrative expenses together with an increase of quarter over quarter to 600 to 650 million, driven primarily higher stock-based compensation due to an improvement in operational process. They expect Q1 sales and marketing to be 85 to 100 million, lower than Q4, driven by seasonally over NBA spend. Can you imagine administrative expenses being 600 to 650 million? Yeah, my bills this quarter is going to be $600 million. That's crazy, right? That stock's up 5.25%. Checking back in. Let's pull up DraftKings. Stock's up 2.25 now. Nothing on them just yet. Checking back in with you guys. If you're watching for the first time, by the way, hit that like button, hit that subscribe if you haven't done so already. Welcome to the Power Zone. My name is Brad, and we got Don also, who's in the chat, is also my partner in crime here. He'll be live later this evening around 7 p.m. Eastern time. Cover any of your earnings questions after the aftermath, what have you, and also give you some pretty decent trade setups and trade opportunities. If you're wondering why or how we trade around these zones, Don is your guy. And he will be live this evening around 7 p.m. Eastern time. Not today for DraftKings. Is that right? Earnings Whispers let me down. I could have sworn it was today. After hours. No? Yeah. I'm still seeing DraftKings is today. Snookeroo says surprised that Dash. Yeah, the conference is tomorrow. Yeah, I think some people are reading the wrong thing. DraftKings continues to move up here, though. Kind of weird. Let's see. Oops. Trade Desk still holding its gains here. It's up 17.5%. If you guys missed that, Trade Desk, never mind the fact that they beat their earnings and beat guidance and all that, blah, blah, blah. The big thing is that they announced a $700 million buyback, and that's what shot the stock up here. It's up 17.5%. Already had a hell of a day. And it is just continuing to fly. Why is this stock up so much? Well, Trade Desk, their share structure is pretty tight. So you got a smaller share structure, relatively speaking. And so then when you add a $700 million buyback to it, stock's going to fly. Speaking of buybacks, Toast has also announced a $250 million buyback. That stock's up 15% as a result. Still doing quite well. Checking back in with Roku, see where we're at. I still have no idea why this sold off so much, except for the fact that maybe it has something to do with that subscriber number. Michael Hanna says, love to move on Toast. Yeah, man. Really nice move on that. Oh, there you go. Don has some prior obligations. He'll be early. Better hit that bell now. Yeah, hit that notification bell. Don will be live at some point. Let's see. So we covered DraftKings, we covered DoorDash, Roku, Coinbase, Trade Desk, Applied Materials, Toast. We're just waiting on DraftKings still, I think. Was there anything else that we needed to cover? Open Door, if anybody cares, put it in the chat if you want me to cover Open Door. We can see what's going on there. But I think we covered all of the big ones so far. Still just waiting on that DraftKings move. Don says, every time I do a market order, they call it a buyback. All I wanted was a few Trade Desk shares. I wasn't even spending $1 billion. Yeah, right. For sure. Oh, DraftKings. What's going on here? Stock is now down. Put Open Door on the left side of the screen. We'll get to that in a second, but it looks like DraftKings earnings are out. Let me see if I can find those numbers for you. The initial sell-off here. And I told you guys, this isn't a shocker. I told you guys that I thought that the initial reaction to this would have been a sell-off, especially if Super Bowl numbers were a letdown. I think that, again, long-term, this will be a great stock to own. Let's see here. Here's why they're selling off. They reached a pact to buy Jackpocket for more than $750 million. And the stock's down 11% as a result. What the hell is Jackpocket? I probably sound real. Let's see here. Jackpocket. It's a lottery app. It's a lottery app. Okay. You can order official state lottery tickets online. Jackpocket is an American technology company headquartered in New York City, produces apps to ordering lottery tickets in 14 U.S. states and the District of Columbia. They bought Jackpocket for $750 million. When's Brad's birthday? Says Karem. In less than a month. March 9th, guys. March 9th, Karem. Palo Alto earnings are not even today, King Oaken. Sorry to tell you. Let's see here. All I keep seeing is just this buyback. Give me the numbers. Here we go. DraftKings earnings numbers. They came in missed on Q4 revenue, 1.23 billion versus 1.24. The Q4 adjusted EBITDA 151 million versus 177.1 million. Also not a great number. Q4 monthly unique players 3.5 million versus 3.44. That was expected. That's not a bad number. Sees 2024 revenue anywhere between 4.65 to 4.9 billion. The estimate there was 4.5 to 4.8. So beating on yearly guidance revenue numbers. Deal to drive 260 to 340 million incremental revenue. So kind of a weird earnings report. So they missed on revenue. They beat on guidance for the full year, but then reached an agreement to acquire Jackpocket for 750 million. I don't know what Jackpocket is actually worth, but there's an expectation from this is from DraftKings that they expect it to drive 60 million to 100 million of adjusted EBITDA in fiscal year 2026. Obviously, whenever you see buyouts like this, it's for the long term, and it's not unusual to see a sell off on a acquisition, especially if investors feel like it's a bad deal. If they feel like they spent too much on something like a jackpot. Jack Pocket. Could it be that they spent too much for it? I guess time will tell, but obviously it's always a risk, right? Investors kind of get spooked by that. I don't know anything about Jack Pocket, but the concept seems interesting. 14 states already engaging in the ability to buy lottery tickets through an app. I don't have to go to the gas station to get a lotto ticket. Kind of seems nice to me. But again, I don't know how much money they're making. I don't actually know what the company is actually worth. Apparently, DraftKings thinks it's worth 750 million. Don says I'm not going live unless we get 100 likes. Yeah, there's about 250 of you guys watching. If you wouldn't mind hitting that thumbs up, we got 51 likes so far. So we got a ways to go. Hit that thumbs up, hit that subscribe button as well. If you're visiting for the first time, I would certainly appreciate that. Hit that notification bell because I go live Monday through Thursday to cover earnings, and we react to earnings. This is really the only channel that does it. It's really the only channel that covers earnings like I do. And I'm not blowing myself up. It's just the facts. If you want to get decent earnings reactions as they happen, yeah, you can go to CNBC, but they don't get them as they happen like this. So make sure that you hit that subscribe button, hit that notification bell if you want to get live reactions to these earnings. I'm just looking at Open Door here, and it's up 2% after a pretty interesting sell-off. Let's see where Open Door is at right now. Open Door came in. It looks like they came in a loss of 14 cents, beating the loss of 19-cent estimate. Revenue came in at 870 million, beat that by a lot, 827.63 million. And honestly, that's not really too surprising. And I'll explain why in a second, but 547 homes purchased and 323 homes sold compared to Q3. Contribution margin of 3.4% represents a decline from 4.4 in Q3. But the beat on earnings and the beat on revenue in particular isn't surprising to me, especially from when we covered Zillow's earnings. It seems as if revenue's coming back. It seems as if the real estate market is kind of coming back up. Premature to really kind of like say for sure, but this last quarter, especially for the real estate stocks, has done pretty well. Thanks, Nukuru. Appreciate you. Z-Writer said it's $1 billion company for sure in regards to Jackpocket. So buying it for 750 million, at least according to Z-Writer, seems like a hell of a deal. But we'll see, I guess. $750 million is a ton of money. And I would also like anybody who's big on DraftKings, and I've said that like DraftKings I think will be good long term. But when I talk about growing at all costs, this is kind of what I mean. DraftKings has been growing at all costs since inception. And, take what you will with 150%, performance over the last 52 weeks. That's how much DraftKings has gone up by. But this is the kind of shit that makes me nervous, because they just continue to spend money. Last quarter, they came in at a loss of 35 cents, and then they go out and buy a $750 million company. I understand, like, it's a land grab right now. I really do. But at what point are you like, I don't know. Did they say their earnings yet or no? Yeah, I actually gave the earnings out for that. I'll give you the numbers again. They came in at 29 cents, beating by 11 cents, 1.23 billions, 1.23 billions, 1.23 billion in revenue. They missed that by $10 million. So missed revenue. They're raising their fiscal year 2024 revenue guidance by a range of 4.65 billion to 4.9, up from the previous range of 4.5 to 4.8, which the company previously announced on November 2nd. Company's updated 2024 revenue guidance ranges equates year-over-year growth of 27 to 34%, which is also a little bit of a slowing of growth too. DraftKings is also increasing its fiscal year 2024 adjusted EBITDA guidance. Company now expects fiscal year 2024 adjusted EBITDA between 410 to 45 to 510, compared to adjusted EBITDA guidance of 350 to 450. So that's a big increase in guidance as well. They do spend a ton of money, and again, like I said, makes me a little nervous, but is what it is. Yeah, DoorDash continues to sell off, now down over 10%. And let's go back to Roku. Still a head scratcher for me. Can't seem to get it together here. It's down 17.5% off good earnings. Why this sold off, I really can't tell you, except for maybe that subscriber number. That's the only thing that's like, maybe that's what it was. But they beat on guidance. They beat everywhere. They beat revenue. They beat earnings per share. They came in with stronger than expected guidance. I really don't understand why the sell-off, other than perhaps maybe they missed out on some expectations on subscriber count and annual revenue per user. I mean, that could be. Coming from the CEO, Anthony Wood, he said, we plan to increase revenue and free cash flow to achieve profitability over time. At the same time, we remain mindful of near-term challenges in the macro environment and uneven and ad market recovery. I just don't, I don't know. Almost makes you kind of want to buy it. Pasha, do I think that DraftKings will come back up? I think so. I mean, I don't think it'll be something that happens tomorrow. We come back in on DraftKings, and it's not down by a ton. 3.5% is no big deal. Let's see here. Just lost a lot of money on DraftKings. Well, I guess it depends on your time horizon, right? Like if you were just making a quick flip on this and you decided to trade earnings, is what it is. I mean, you might as well go play roulette at the casino, because that's how earnings go. If you're in this for the longer term, for the longer haul, and you're not planning on selling anytime soon, I think you'll be fine with DraftKings. It's just going to take a minute for it to turn around, but it just it's a interesting afternoon, guys. Lots of buyouts. Or buybacks, not buyouts. One buyout, DraftKings buying Jackpocket, and then we have Trade Desk with a $700 million buyback, then Toast with a $250 million buyback. Both of those stocks are up by double digits, and it's been a crazy afternoon. Coinbase did well. Applied Materials did well. Lots of good earnings this afternoon, guys. Super pumped for this, and that's going to do it for today's show. Hit that subscribe button on your way out the door if you don't mind. Thanks so much for tuning in. Allow me to be a part of your afternoon. Guys, have a great weekend. I'll be back on Monday. at 3:45 p.m. Eastern time to cover yet another week of earnings. Take care. Have a great weekend. I'll see you Monday.